All right, good morning everyone. It's great to see you all. My name is Brad Walsh. I'm the General Manager of Sales at Acacia Energy and I'll be your MC for this morning's breakfast session. Before we begin, I would like to respectfully acknowledge the traditional owners of the land upon which this presentation is being held today and pay respects to their elders, past and present. We also acknowledge and respect the traditional owners of lands across Australia, their elders, ancestors, culture and heritage, and recognise the continuing sovereignties of all First Nations people. I would like to thank all of our partners for their support, without which this event would not be possible. Swinburne University and the Advanced Manufacturing Hub, APMA, Australian Packaging and Processing Machinery Association, AMTL, Australian Manufacturing Technology Institute, and our strategic partner, AEES Group, Australian Energy Efficient Solutions. And finally, welcome you all here today, both online and in person. For those that are in person, thank you for braving this morning's Melbourne's weather and traffic to attend. And for those joining via live stream, we thank you also. We have quite a few people from across our lands, from regional Victoria, Queensland, New South Wales and South Australia. So a big thank you for all of your attendance. This session will be available as a live recording, so for those wanting to revisit any of the information, our marketing coordinator Faith will have both slides and the recording at the conclusion of today's presentation. Now please help yourself to all the food that you see on the table. That was pedal powered here. And if you haven't already, help yourself to all the coffee and tea and all the refreshments that you see at the back. So why are we here today? Today is all about learning how you can take control of your electricity and what is an uncertain market. You want to be able to walk out of today's session with a better understanding of both what's happening in the market and causing the volatility, and further, what options you have to address those in your business. In today's session, we're going to be discussing a number of things that come into play when discussing your electricity for your operations. Firstly, we'll be looking at what's happening in the electricity market in both Australia and how the market operates and how it's been causing these issues and recent volatility. Then we'll move to understand your electricity bill and what you're actually contracted for. We'll then address your power security and power quality, both what it means and how these disturbances affect your operational efficiency. Then we'll delve into the options available to tackle all of these issues and into detail the options that you can provide back into your operations. Finally, we'll touch on ESG scores, sustainability and decarbonisation, which are all big topics in Australia right now and absolutely essential topics for businesses that need to consider when making informed and operational decisions. Now, to facilitate these points, we'll be conducting a series of live polls throughout the presentation. Now, let's get smart here and set up this live poll right now. So if you can please grab out your devices. Now, if you've got your device, you'll see up on the screen the QR code, or on your tables in front of your name tags, or behind your name tags, you'll also see the QR code if you can scan that. If you are watching online, if you can go to the description section on the live stream, or you can also go to the web link that's been provided. And if you're having any login issues, please do let us know and we'll be able to come around and support you. I'll give you guys 30 seconds just to set this up. Now, to be clear, through Meeting Pulse, this is completely anonymous. They will not take any of your data and information, so there's no privacy risk to you. You'll see that there's a few sections down the bottom, the Q&A, the polls. Now, throughout this presentation, if you do wish to ask any questions in relation to the Q&A, you don't feel comfortable to raise your questions, then please just pop them into the Q&A that you see in the live poll. And for those that are watching via live stream, if you can populate your questions into the Q&A on the poll, that would be fantastic. And we'll get to it once we get to the Q&A section. As I said before, if there's any questions throughout this process, please do raise those questions personally or via the poll, and we'll answer them either A, as we go, or B, towards the end at the Q&A session. Now, with all that said, I would like to welcome our first speaker, Acacia Energy CEO Stephen Thompson, up to the lectern to kick off the discussion with what has been happening in the electricity market. Stephen has over 20 years' experience in the Australian and Southeast Asian electricity and gas market. He has a deep understanding of the energy market, regulatory framework and value drivers. He has worked under roles in leading spanning businesses, startups, running contestable markets, leading industry transformation, leading organisational transformation and advising on market reform. Welcome, Stephen Thompson.
Thanks, Brad. Give me the clicker and we're off. Excellent. Well, welcome everyone, and welcome to everyone who's up on the live stream as well. Really excited to be here today, and really enthusiastic. Great to have people here in the room with us and people online, and to do what's one of the first of our real big events of a new company, or newish company, and getting excited about it. So what we'll talk about today is what's been happening in the electricity market recently, and give you a little bit of an understanding about some of the things, because you would have heard, probably a bit unusual, that if you're listening to the radio, you hear the Chief Executive of the Australian Energy Market Operator named personally, the head of the AER named personally, the ministers getting up there and talking about it on a regular basis, because it was unprecedented, it hasn't happened before. So to get an understanding of that, first look at how does the electricity market operate normally, and you don't really see any of this in your electricity bills, but this is how things happen behind the scenes. And effectively, we have generators and we have retailers. The generators are generating their electricity and making that supply. The retailers want to buy it and sell it on to the customers, and in fact they contract with it and they pretty much take whatever it is that you use on a daily basis. But AEMO sits in the middle, the Australian Energy Market Operator sits in the middle, and it's their job to make sure there's a matching of supply and demand, and they do that with a bid stack. So the generators bid in to say, I'm going to provide a certain quantity of energy at a certain price, and they build this stack up, and that's what AEMO's got available to choose from. And then AEMO has to do a forecast of what they think the demand for electricity is going to be, and they do that for every 5 minutes of every day, and they do that a day ahead, and then they continually do that throughout the day after they've done the operations. But they set everything up the day before and then dispatch against that in a little bit more fine detail the following day. So on here you've got the bid stack, which shows the $30 bids, the $40 bids, the $70, all the way up to $15,100, which is the very top price that can be paid for electricity. And that is, the market is capped, you can't bid above that price. But it doesn't happen often, but people will get dispatched at that price. On the right-hand side, that's AEMO's forecast, which is around about 9,000 megawatt hours that they're anticipating is needed to be used. So the price gets set at $70 a megawatt hour. So you've got price equals demand, and that's what sets the price. What happened recently though was in the coal-fired power generators were offline. Now, some of them were offline for scheduled maintenance, and that's not particularly unusual, and AEMO sort of anticipates that. But then we had a number of unplanned breakdowns in the marketplace, so those generators just simply weren't available unexpectedly. And then with the floods in Queensland, there were a number of generators up there who, there was nothing wrong with the generating units, they just couldn't get the coal out of the ground and up in to feed the generators to run. And that took out all of that low-cost available generation. And when the low-cost available generation disappears, the bid stack has to start up at a higher price, which moves the forecast up to a higher price, and it then intersects up at a higher price of scheduling, which in this case, on that same scale, would have been $340 a megawatt hour. So you've gone from 70 straight to 340 just because generation wasn't available. Now that's not unusual, and that does happen throughout the day, and every 5 minutes of the day. Sometimes the prediction of what people were going to use might have been wrong, so the demand goes up and the price goes up and it moves up and down. But what happened here is it was a sustained activity. those generators that had the unplanned breakdowns, everyone's experiencing the supply chain issues of getting expensive bespoke equipment delivered into your sites, some of which has to come from overseas. So your plant is offline for a lot longer than you would have anticipated it happening. And therefore, these prices just continued on and on and on. And AEMO has an automated process set up, and it looks back over 28 days, and it looks at what the cost of energy has been over that period of time. And this is a mechanism to protect consumers and to protect business, because if the price stays high for long periods of time, it's really going to end up being an unsustainable price to everybody. And so what they do is, if the price over 28 days is an average, and this is the average over those 28 days of $640 a megawatt hour, which is a very high price, it automatically triggers a price cap, and that price cap becomes in at $300 a megawatt hour. And at $300 a megawatt hour, you can see here, if we're dispatching bids that have been bid in at $340 a megawatt hour, they're not getting paid the price that they've bid in. So short term, that's not too much of a problem, but again, this continued on for longer periods of time. And when that happened, and it started going on, and this is where there was the sort of the catch cry that the generators are gaming the system and they're pulling they're not supplying their generation into the market. Well, if it runs for a long period of time and your cost of generation is high, but you're being asked to supply at only $300, what operations manager is going to go to their chief executive and say, "Don't worry, boss, we're going to get it back because there's a process. We can go and ask the regulator, please, sir, can you make up that money for me?" And you've got no certainty about how much of that money is going to be made up, or if any of it's going to be made up at all. So the generators who were being dispatched were saying, "Well, sorry, I'm actually going to pull my capacity. I'm not going to supply because it's commercially unsustainable for me to do that." They've done it for a period of time, but then they just say, "Sorry, we're not going to do that." That exacerbates the problem, because the next option AEMO had is to go to the $800 bid. And the $800 bid's not going to supply against that, so they go up and up and up, and people just stopped participating and stopped engaging in the market. And that was when AEMO was unable to operate the market. And under the rules, that's what they do, is they say, we're suspending the market. Now, in the suspension, all rules are off. It becomes a complicated way of trying to make the arrangements work, but it does work, and we did end up getting supply, and there's a way that the generators do get paid for it, but it's going into a period of uncertainty, and that uncertainty makes everyone uncomfortable and drives you back to or towards a more normal operation, which is where we've landed. But it's all based on the fact that the generators, the coal-fired ones, which are at that base part of the bid stack, were out for unplanned outages. A lot of it's not their issue. I don't believe that there was a lot of gaming going on. There may have been some, but the principal driver of what caused this was the fact that generators were being asked to operate with a payment that was not going to meet their operating costs, their true operating costs. Now, interestingly, that price of $300 a megawatt hour was set in 2008 and has never been reviewed. And it hadn't been reviewed because the administered price system has sort of worked for long enough and not been an issue. But in this case, it went for such a sustained period, and it caused the problem of the market having to be suspended. So next week there's a public forum. So one of the gas-fired generators has put in a rule change to move that $300 to $600. So there's now a consultation happening around what that administered price cap should be, and there's a mechanism in place to do a review under the auspices of another body called the Australian Energy Market Commission, who actually their job is to make the rules, and that's full of lawyers and economists. So hopefully we'll get a good position. What this has done, though, I guess if you look at this and think of the context of your business, because that's on the supply side and what's happening in the supply side, it's going to manifest itself into prices and what businesses are going to have to pay for their electricity. It's not a great story. From Q1 of 2021 through to Q1 of 2022, these figures, this graph published by AEMO, prices went up 141% in the wholesale market. So on average, the average cost of settling electricity in the wholesale market went up by 141% over that 12-month period. If you look at this graph, the Q1 of 2021 is just a little bit to the right-hand side of the middle of this page, and you'll see these the three red bars to the right-hand side. We've gone up another 203% since that 141% jump. It's continued to rise. So this actually is a really good demonstration of the fact that when you were contracting for your electricity over the last few years, you were contracting in a market that was declining and getting forward prices that were looking at a pretty favourable picture of an outlook of what the market was going to look like. If you're recontracting now, you're looking up a hill. And that's the steepness of the hill, and it's pretty steep. So it's an issue that right now is a time to really think about how you're going to contract, how long you're going to contract for, who you're going to contract with, and the mechanisms about how that can work for you and what you can do about that behind the meter. So just reiterating, why did this happen? It's really because coal-fired plants are the base load, and when they weren't available, that took that whole base load up, pushed prices up. That's a short term, but it's also a long term because our transition out of the fossil fuel market into the renewables market is going to take this generation out. Now, businesses are running these generators, have invested in these long-term assets and are looking to make their money back on their long-term assets, but those assets are going to start closing. And there's forecasts of when the market will fully transition and there will be no fossil fuel, particularly no coal, and people are talking early 2030. So there's maybe 10 years left for these generators to run, and the cost of running a plant in its last few years is going to increase. So coal is going to become more expensive. The other issue we've got in a global world is we've got pressure on gas-fired generation. Gas, I ran the gas markets in South Australia and Western Australia. Now, Western Australia had the issue that the Western Australian gas comes from the North West Shelf. When the North West Shelf was built, there was an obligation to provide some of that gas down into the Perth Basin, and they put a 20-year contract in place at basically a fixed price, escalated by CPI, that was priced at the price of gas when that contract was set up. 20 years later, that contract finished and not enough work had been done to prepare for the end of that contract, and there was an expectation that those prices, the Perth Basin and the Perth economy would continue to enjoy the benefit of those prices, but the value of gas going offshore through LNG was through the roof, and the price of gas going into the Perth Basin went up 400%. Now we look at the East Coast. We've opened up the East Coast gas market to offshore LNG, and offshore LNG is worth a lot more than what we've been traditionally paying for gas domestically, and why we've got such a strong gas market here, particularly in Victoria, where we get home, turn on the gas-fired heating and make our houses all quite comfortable. That gas is now valued by the people who are processing it and sending it offshore much higher than what they've got the value of coming into the local market. So gas prices are going up. When you're converting gas into electricity, electricity prices are going up. So the two core gas and coal base load generation capacity that we've got in the electricity market today is becoming more expensive, which is good for the transition to renewables because it makes renewables look good. But from a consumer perspective, prices are still going up. So we all have to be prepared for that's what our future is going to look like. Not a rosy picture, but it's unfortunately the realistic picture. So out of that, customers who are recontracting for their electricity over the next couple of years, you're going to see price increases. So as that happens, that's going to be a challenge for you. But what can be done is about reducing the amount of electricity you take from the grid and fixing the cost of that electricity in the long term with some other different solutions is going to be crucial to business viability. And that's just a message that I think everyone needs to understand and think about. And we'll talk about some of those things a little bit later today. But now, I think we've got our first poll.
Yep, absolutely. So if you can please get out your devices once again. For those that are on their device, if you can open up the window, perhaps click refresh if in case that's a requirement. And let's conduct that first poll. This is 2 questions that we'll see in the poll. The first one is how long does your company generally contract your retail electricity? And then just click next for that answer. I'll give you guys a little bit of time to complete that poll, and for those that are online, I'll give you some time also. Just whilst we're waiting for that time, Steve.
Yeah.
Just a couple of quick questions if I could. So very interesting, around the trends that we're seeing in the market right now. do you see that the current cost of electricity, because we're seeing recontracted clients that are seeing a significant cost in their electricity going in a rise capacity, is that going to stabilise for a period of time? Are we at the peak in the next quarter, the next 6 months, maybe the next financial year? Are we at that peak, or is there a trend for it to continue as you potentially indicated?
I don't think we're at the peak.
Yeah.
We're seeing, I'll move over here so as the people on the live stream will still be able to see. I don't think we're at the peak, but I think the rise has been really sharp in the recent couple of quarters, but I think it's going to trend off and rise, but at a more gradual rate.
Yeah, okay. And in terms of the generation companies, let's just pick on AGL as an example here.
Mm-hmm.
So the price of coal fuel is expensive, and we know that renewables are an absolute solution. So solar power is a lot cheaper. When do we see that transition happening from a generation company? And two-part question, and once that occurs, will we then see a lower cost or a levelised cost of electricity at a far better rate?
So I think the transition has started to happen because businesses like AGL, Origin, the big businesses that own generation, they are investing in renewables. So there's big solar farms coming up, there's big wind farms that have been produced. The scale of those is going to have to be substantially bigger than what they've been to date. And I think everyone's heard of big solar and big battery solutions to displace what's there with the coal-fired or the fossil fuel-based generation capacity. Because clearly the sun doesn't always shine and the wind doesn't always blow. They're the two prime sources of renewable energy. So you've got to effectively make more than what you need at any particular point in time while you've got that asset, and then store it to then be later released. And it's an expensive transition. We're starting that. We've got a number of big batteries, but we will need a lot more. And the other issue is the transmission that has to be built to then move all of that electricity, particularly if we're going to be substituting gas as a fuel for a whole variety of operations and moving that to electricity. The electricity network that we've got isn't big enough to transmit all of that electricity today. Now that's another cost that's going to come in, but what you're doing is you're substituting the cost of gas there as well. So it's an expensive investment set. There's a couple of things that can be done to try and reduce that, and I'm not really talking about it today, but community batteries, I think we've done one of those, and I think there's a real place for those, particularly around residential, to put community batteries in, generate the electricity locally, so solar that's not being used during the day by people who aren't home, store that and use that at night when they get home. You're moving electricity more, but it's all actually happening locally, so you don't need those far away solar plants and you don't need the transmission to get it there. I think that's got a real place and it needs a bit more encouragement. But overall, I think there is a transition, but it's going to take 10 years or more to get us to that. I mean, we've got some targets now, which is great, but and those targets will drive behaviour, but it is a long transition that we're in.
Okay, great answer, thank you. Steve, there's probably a burning question by a number of our participants here.
Yeah.
And they're coming into a recontracted period. What kind of term do you think that they is wise? So when you're looking at everything that you've just indicated, what term? 1 year, 3 year, 5 years, 6 months? How do we even come up with that?
Test the market is probably when I would say if you're testing the market, ask for options. Get a 1 year option, get a 2 year option, get a 3 year option, get a 5 year option. Look at the different options that the businesses will get, and I'd imagine that retail offers will change and vary monthly from what you get. They'll move regularly. There's never a time you're never going to make the perfect decision, because whatever decision you make today, in 2 weeks' time or 2 months' time, you'll go, oh, I could have got a better deal if I had waited. But you've got to lock in, you've got to make a decision at some point. So that's there. But I think the point that I made on the previous slide is look also at ways to displace the amount of electricity you're getting through the grid, through those pricing mechanisms, and fix the cost of some things behind the meter. And that fixed cost stays long term for the assets that you invest, because you're putting assets in and you're depreciating those assets, and that's really what the cost of your electricity is from those things, and that's fixed for 10, 15 years, even more.
Okay, well, whilst I've got my phone out,
Yeah, I'll grab mine as well.
let's look at those results. Interesting.
Just waiting for mine to refresh. You've got the results.
Yep, I do.
Have a look.
So how long does your company generally?
Most people want 3 or more years.
Yeah, so
That's interesting.
does that surprise you?
That's not typical for the C&I customer base. 2 to 3 years has been a common contracting term. That's showing to me people are thinking of getting away from that frequent change of retailer locking in a relationship, getting a better deal because of that uncertainty about a rising market.
And the next question, we can see the results are quite interesting for around 30%. So what are their expectations in terms of increased costs?
Yeah, so there's sort of 30% a pretty popular expectation of what the price increase would be. Greater than 50% is almost equal to the 30% expectation. I would say the people who are expecting greater than 50% are probably closer to the mark. Because if you look at that trend of what the prices have been, just go back to one more graph, this graph, 141% year on year from first quarter last year to first quarter this year. It's gone up 200% this year. I mean, it's a very steep rise compared to previously, but even if you look backwards and think if we're in the bottom of the market, which I think we are, if we're on an upwards trajectory, that's more than a 30% rise from where we're at on contracts that have been let in the last few years. So 30% to 50% increase, possibly even more, is really the likelihood of where prices are going to be. So electricity is a high input cost into the business. That input cost, you need to factor in some significant increases in that cost for the electricity you're getting through the grid.
And if we now zero back in on businesses so that they can start to make an informed decision, we've got CFOs and CEOs and managing directors in the room, and we've also got procurement directors in the room.
Yep.
And we need to now start to think about the cost of electricity, and the best way to do that is to make informed decisions when you're reviewing and understanding and comprehending your electricity bill.
Yep.
It's a vital step in order for you to understand what you're contracted for. It's a vital step to understand what you can impact. And so I think it's a great starting point for businesses to go into further detail, and perhaps maybe you and I can, or I'll hand over to you, you can share the next portion of the slides by which we can start to get a greater understanding of how you can understand your electricity bill, and let's go into that detail.
Perfect. Thanks, Brad.
No worries.
So